Okay, so I think if my stream gets any problem, you guys should let me know. Someone from the organizing team can just give me a dial and then put me that information. Okay, I was saying the purpose of this session is to do two things. That's what I've decided to do. Ideal thing to look at would be to have an understanding on amendment and then look at the RTP. So that's the approach that we should take. With regards to the amendment, I had already told you that I've done an earlier session, which I'll definitely put it on YouTube, or you can find it on Sikasa COI codes pages as well. So that's something that I was starting to mention. And when you're looking at amendments, ensure that you look at two amendments in one shot. Like, do not look at only May amendments, May and November amendments. Both of them has to be looked into. Then, and in terms of mock test papers, the first mock test paper also we'll try to work out. We're going to work out and then have that practice session now. And so it's going to be very important. I'll give you the approach that you should have for each kind of question. So ensure that you have a book and pen with you so that you can work out with me. It's not just that you sit and then watch. So ensure that you're in a place where you can do that as well with me. Okay. So shall we start off? So I'm going to do the entire May 24 RTP now to start with. And I need answers on the chat box so that I understand that you guys are there and then listening to me. So we'll start with revision test papers. So we'll take the RTP. Okay, so this is your ICI RTP, which you can find it on the ICI website itself. You can go ahead and download and then keep it a copy with you. It is mandatory for you to go through revision test papers. The revision test papers for taxation would be just one document, and you will have to find out in that part B. Like if you look at the whole group RTP, you will find this starting from page number 70. Okay, and I think the people who are writing for exam for the first time, the first goers, these people will have our revision test papers couriered to you, so you can even open and then start referring that. Okay, with that introduction, let's start. We will first look at question number 1, which is a case study question. Now, let me first give you an understanding on how you should approach a case study. Case study questions should be approached in a different format than that you would have already done with approaching, especially in taxation. You cannot actually read a paragraph and assume to remember everything and then go ahead and read the questions. So the approach that I would suggest for taxation would be to look at the questions first, then come back to the paragraph and then look at question once again, and by the time you're reading the question the second time, you should be able to write or pick the answers and then put it as your MCQ answers. Okay. Now I'll also tell you the approach that I suggest. This is my only suggestion. Like if you're strong in other part of taxation, you can look at a different approach. We know that it's 50-50, right? 50 marks it will be goods and service taxes, 50 marks it is income taxes. Generally the question that comes on GST is slightly easier than your income taxes. So my suggestion would be the order is that first you look at 30 marks, which is the MCQ. But when you're looking at MCQ, you don't look at MCQ for GST first and then GST description and then no. You look at MCQ together. So I'll suggest you look at MCQs in total. So once you read and answer the 30 marks MCQ, it can take probably around 30 minutes to do that. That will be the best time to do it. Like 30 marks, 30 minutes is like you're in a good pace. If you do this 30 marks, then you go to GST. Finish all 35 marks of GST because it's 50-50, 35, 15. So this 30 will be 15 marks plus 15 marks in 15 marks GST, 15 marks income tax. Then 35 marks, then income tax 35 marks. This is my suggestion. But you can always, if you're good at the other subject, you can always look at something else also, right? Now, what you have to be very careful here is that when you're doing the 35 marks GST, since I'm taking that, I'm going to talk a little more deeper on that. So, if you're looking into 35 marks GST as a paper, the first question, so the structure of the question is kept as 15 marks, one compulsory question, then 10 marks, 3 questions, out of that you write 2. So that makes it 35, right? When I say 15 mark one question, it's not one question as such. Question number 1 for the description would be 15 mark compulsory. but in that you have a 10 mark 5 mark split. Then every 10 marks question has split inside, you will have multiple question. The last question is always theory and you get one option in that. This is the structure. When we are looking into MTP, you will really understand the structure. Now this 35 marks, I would suggest you don't write the compulsory question first, because generally compulsory question would require some kind of an exertion in terms of your brain, and the first time when you read that and you get struggled with some kind of understanding, you're overwhelmed with your attempt of examination, all that. Because of that, I'll suggest you go ahead and then write one of those other questions first. Let your first answer be the best answer. Okay. After doing that, then you go ahead and then do the compulsory question, or like keep an order in your head while you get that 15 minutes cool off time, how you want to do it. Okay. This is the introduction to my my talk on how you should approach the examination. Now with that, let's start looking into case study. You will get 2 case studies. If you look at MTP, you will get 2 case studies to go and write answers. So you have to ensure that you know how to approach a case study. Now the case study needs to be approached in this way. First you read the question. So this case study has 1, 2, 3, 4, 5 questions, right? So we'll first look at what is the question they're asking. So this is based on the facts of the cases scenario given above. Choose the most appropriate answer to question 1 to 5. Question 1 says, for transaction relating to renting of commercial space, what should be the rate of taxes? They said rate of GST on rent and maintenance is 18%, 18 for rent and material 5. No GST is charged on recovery relating to material used in maintenance. The rate of GST on rent alone would be 18%. GST on rent and maintenance related recovery shall be 5%. So they're giving you rate. Once the moment you read this question, your brain should tell that, okay, they're asking something composite mixed, because that's where the rate picking will happen. So there must be something in the paragraph. Compute the value of supply under section 15. So there's a question which is asking you value of supply also. While reading, you should also ensure what are the things to be included in value, what are the things to be excluded in value. With respect to hotel accommodation services provided to Mr. X, GST payable is what? So there is a hotel accommodation question. They're asking what kind of GST would come. There's a very high chance that this question would be based on the place of supply provisions. You're trying to understand whether it is intrastate or whether it is interstate. With respect to hotel accommodation services provided to Mr. X, GST payable by ABC Limited is what? Okay, that's what the question is. They're saying it could be nil, it is payable under RCM, it is because it's provided to unregistered, there is GST is GST in the nature of IGST. So we'll look at what is the related provision for that. Which of the following option is correct regarding ITC availment? They're saying amount of ITC relating to procurements of goods is available. What kind of procurements they are talking about? They're talking about in respect of GST paid on procurement of goods meant for the purpose of corporate social responsibility, CSR. This is an amendment. There's a new provision called 17.5 FA that is added, and which said inward supply for the purpose of corporate social responsibility is not allowed. So we know that most likely the answer to this question is it's not available. So we already know. We don't need to read the paragraph. This is the possible answer. We need to confirm by reading if there is anything else. With me? Then which of the following option is correct with regard to the advices given by GST officer in respect of auditing of accounts? They're saying auditing of accounts. Now, they're saying there is no requirement of separate audit for financial statement from the perspective of GST provision. Audit is actually not applicable for now. Audit is removed in GST. There is no GST audit that is applicable now. So, if at all that question is asking which one is correct, this is of course correct. Only reconciliation shall be audited by chartered accountants. No, even reconciliations are not audited. It's self-certified. Okay. Then annual return as well as reconciliation statement shall be audited by chartered accountant. No, not that is removed. Separate audit of financial statement at each state level is required by ABC. No, nothing like that. So we actually got the answer for 2 questions without even reading the main paragraph. Now go ahead and then read the main paragraph. We will try to understand. I'll read it for you. Reading service is free for you. Let's start. ABC Limited has its manufacturing unit in the state of Rajasthan. Further, it has ancillary unit in the state of Madhya Pradesh and Gujarat and is registered in each of these states. Moreover, ABC Limited owns and operates a hotel in Udaipur, Rajasthan. In addition to aforesaid, ABC Limited owns a commercial space which is rented out to a registered person at the monthly rent of 50,000. The maintenance of the premises is the responsibility of ABC Limited. In pursuance to the same, during the month of April, ABC Limited incurred certain expenses on purchase of maintenance related materials. The said expenses are recoverable from tenant along with the invoice issued for rent. Rate of tax applicable to material used for maintenance was 5%. With this understanding, you tell me, like say ABC Limited has a commercial space. Renting of commercial space, is it exempted? No, it is always taxable. Which space renting has a chance to get exemption? Only residential property, if you give it on rent, there is a chance that you might get an exemption. This is always taxable. Okay, commercial space is always taxable. Now they have given it on rent of 50,000. They are also adding an additional 5%. Okay, sorry. They are also having an additional material that is billed. Okay, certain expenses are additionally billed to the customer for maintenance. So they are not just charging monthly rent of 50,000. They are charging 50,000 plus the maintenance. Now the maintenance has a separate rate of 5%. And renting has a rate of 18%. All amounts are exclusive of GST. Rate of taxes or inward outward supply is 18% unless otherwise mentioned. Now my question is maintenance an incidental activity to the main activity? Give me the answer on the chat box, everyone. Yes. So the entire amount will be taxed on what rate? The moment it is a composite supply, we have to understand what is the principal supply. What is principal supply here? Renting of commercial space is the principal supply. So if renting and maintenance, if it is given together and the principal supply happen to be renting, the rate of renting will be applicable for the entire amount. So what will be the correct answer to this particular question? See, now you don't have to read the question again. You can just directly go to the answer. You tell me from which out of the options that is given here, which do you want to pick as the correct option? GST rate on rent and maintenance of material shall be what? 18%. Aim with 18%. So option A is the correct option. Are you understanding? Okay, continuing with the discussion. During the year, ABC Limited agreed to provide hotel to Mr. X for a business conference to be held in Udaipur. Mr. X is an unregistered person residing in Maharashtra. Now, if at all I provide the service of renting of hotel, accommodation for the purpose of official function, what is the place of supply? Which section talks about place of supply? Which section talks about place of supply? Section 12 subsection 3 talks about place of supply. Which act? IGST Act. Section 12 subsection 3 of IGST Act says place of supply for the purpose of accommodation services would be the location of immovable property. Okay, so ABC Limited, where is ABC Limited? They have units in Gujarat, Madhya Pradesh. They have hotel in Udaipur, Rajasthan. So their Udaipur, Rajasthan hotel is providing services. So what is the location of supplier? It is Rajasthan, Udaipur, Rajasthan. What will be the place of supply? That is again location of immovable property, that is also Rajasthan. So on hotel accommodation services, as per section 8 of IGST Act, it says if location of supplier and place of supply are in same state, if it is same state, it is called as what supply? Intrastate supply, right? The moment it is an intrastate supply, what GST would come? CGST and SGST. Now let's go to the question. What is that the question was saying? We were trying to answer a question. Look at third question. With respect to hotel accommodation services provided to Mr. X, GST payable by ABC Limited is nil. GST on accommodation services payable by recipient Mr. X under reverse charge. Nil. GST on accommodation services provided to an unregistered person is exempt in the nature of CGST, SGST. So option C is the correct answer. Right? It is in the nature of CGST and SGST. So we got the answer for 3 and we got the answer for 1. Please note, we have not even done reading the paragraphs. So we are getting answers now. Otherwise, you read the paragraph, you look at the question, again you have to read the paragraph because you were not invested in reading that particular paragraph when we were reading initially. Then let's look at continue reading. ABC Limited made supply of machinery in the month of June, details of which is as follows. Basic price of the machinery before TCS under Income Tax Act is 45,000. Okay. Then should it be included in value? Yes, this is called as transaction value. 15 subsection 1 says transaction value should be included in value, and that's what you have to pay GST on. So 15.1 is included. Tax collected at source under Income Tax Act 2500. Is it included in value or not included in value? Section 15 subsection 2 clause A says any taxes other than GST has to be added to the value. But there is a clarificatory circular which says, what is that it says? When I say taxes other than GST, if I collect from the customer should be added to the value, it does not include TCS. TCS is not collected on the machinery, it's completely a different logic. It does not have the characteristics of taxes other than GST. When the government says taxes other than GST, they mean the taxes relevant to this particular supply. Are you understanding? So should it be included in value? No. Then it received a subsidy of 3,500 from Green Foundation Private Limited for usage of green energy, and the subsidy was linked to the units of energy saved, not aforesaid machinery. Question: is it a what kind of subsidy? Which section talks about subsidy? Section 15(2)(e) talks about subsidy. I'll tell you what the provision in subsidy was. Okay, I'll show you the provision in subsidy so that you understand that also well. Okay, so look at this. Subsidy is directly linked to the price. So 15 subsection 2 talks about items to be included in value of supply if not already included. In that clause E says subsidy directly linked to the price. If it is a non-government subsidy and you have reduced it already, then you have to add it back to the value. That's what the provision is. So a subsidy which is directly linked to the price means that you get the subsidy when you make a sale of a product. Say somebody is coming and saying that, see, your holding company is coming and telling you that, see, you sell this much of machines, we will give you a subsidy. So you're getting, basically the supplier gets two amount, one from the customer, another from the person who is giving me subsidy. So the government's thought process is that the one that you get from the other person by way of subsidy should also be treated as a consideration, and you have to add it to the value. But this is only relevant in terms of what subsidy? Subsidies which are directly linked to the price. Okay. Now, if it's a government subsidy, you don't have to include it back to the value. But I also gave an understanding about what is that you have to do with indirect subsidies, like subsidy for setting a plan which is not directly linked to the price. See, I've given subsidies which are not directly linked to the price from government or non-government are ignored in computing value of supply. I have given this particular note here. So with that understanding, come back here and you look at, is it a subsidy that is directly linked to the price? No, that's it. It is not a subsidy on the machinery. It's a subsidy that you have been using a lot of green energy. So what should I do with this subsidy? Should I add it back, reduce it, or ignore it? I should ignore this subsidy. You tell me. Then, what is the value of supply in this particular case? With all this information that I have given you, you tell me what is the value of supply. Transaction value 45,000 to be included. TCS not to be included, it's an indirect subsidy, I have to ignore that also. So the value is 45,000 itself. So what is the answer? Option A is the answer. So we have answered question number 2 as well. Okay, then continue reading. In addition to the aforesaid transactions, ABC Limited spent an amount of 5 lakh on the procurement of certain goods which are distributed as a part of corporate social responsibility expenditure during required under the provisions of Companies Act. They made an 5 lakh expenditure for CSR. Whatever GST you paid on CSR, would you be able to take input tax credit? No, that is not allowed as ITC, because it's an additional blocked credit provision that you have. I'll show you the provision there also. A new clause to 17(5) is added called as FA, which says goods or services of both received by a taxable person which are used or intended to be used for activities relating to his obligation under corporate social responsibility referred to in section 135 of Companies Act is a blocked credit. I'll tell you the reason why this is being blocked, because corporate social responsibility concept itself says the businesses who are making profits will have to contribute a portion of their profits for benefits which is not their benefit. If I spend some money and take ITC of the GST I paid on corporate social responsibility expenditure, it gives you this understanding that I spend this corporate social CSR expenditure also for my business. No, the whole idea of CSR itself is that you should not take benefit of the spend. Society should be benefited out of the spend. So with that logic, taking ITC itself does not give the same understanding, right? So it means that if you're spending money on CSR and you're taking ITC, which means that's your business expenditure. It should not be like that. So ITC would not be available. So what is your answer? We have already picked the answer and that confirmed that it is not correct. Which of the following option is correct with regard to availability of ITC in respect to GST paid on procurement of goods meant for the purpose of corporate social responsibility? Amount of ITC related to such procurement of goods is not available to ABC Limited. So we've answered 1, 2, 3, 4. During the scrutiny proceedings in the state of Gujarat, jurisdictional GST officer asked ABC Limited to submit copy of audited financial statement for Gujarat and was of the view that ABC is required to get his accounts audited by chartered accountant separately under GST law for filing annual returns and reconciliation statement in each state. Let me consolidate the provision for you. If your aggregate turnover in the preceding financial year, okay, or if your aggregate turnover for the current financial year is more than 2 crores, you're supposed to file GSTR 9, which is called as annual return. If your turnover is more than 5 CR, apart from GSTR 9 annual return, you are supposed to do a reconciliation to your books and submit a reconciliation statement. Earlier, this reconciliation statement needs to be certified by the chartered accountant or cost accountant in practice. We used to call this as GST audit. Now, this requirement is taken out. They said self-certification is enough. So, there is no requirement for us to do any audit under GST law. That is the fifth question now. Which of the following option is correct with regard to the advice given by GST officer in respect of auditing of accounts? There is no requirement of separate audit of financial statement from the perspective of GST provisions. Is it clear? This is the first 5 questions for you to solve. Option A is the correct answer. Is the first question's answers clear for everyone? Can I have a quick yes on the chat box from everyone, please? Let's look at a full-length question. These kind of questions are the ones they'll ask for compulsory questions. A full-length question which connects multiple chapters. In GST, you don't have a very good question of 10 marks which is testing only one area of your syllabus. It will test you like total income in your income tax, will test you on multiple understanding that you have in different provisions. So whenever you're reading GST, ensure that you connect and then read. Okay. We will read the question. We will also try to have a quick discussion on the related provisions. I'll mark the provisions for you. You should be able to go and then revise it from your material. Messrs Cute and Company, a partnership firm. So in GST, the constitution always becomes relevant for you. So always remember what kind of constitution this supplier is in. Here the supplier is a partnership firm, registered supplier under GST in the state of Bengaluru, Karnataka, has provided the following information for the month of October 2023. Intrastate taxable supply by direct selling agent service to public sector banks. First thing, every time you see a question like this, first identify is the supply given in the question and inward supply or outward supply. So they basically give you jumbled up the inward and outward supply. They will not give you in the same order, first outward then inward, no. So you'll have to understand whether it's inward or outward supply. So put me in the chat box, is it inward or outward supply? Outward supply it is. Where did you learn direct selling agent? You have a provision of RCM relating to direct selling agent. Which section? Section 9 subsection 3, read with notification 13/2017. However, it says direct selling agent provided to a bank is under reverse charge mechanism. But what direct selling agent? It's a conditional RCM which says the direct selling agent has to be an individual. An individual direct selling agent providing services to a bank is taxed under RCM. I'll show you the provision. This is the RCM table that I've structured. Look at the third point. The supplier, a recipient, and we are giving what is the supply that will be under RCM. This is third point, individual direct selling agent other than partnership, body corporate, LLP, etc. providing any services to a banking company, financial institution, NBFC located in taxable territories taxed under reverse charge, right? Now look at this, an outward supply by direct selling agent to bank, whether this would be under RCM or FCM, you tell me now. I have shown you the provision. With your understanding, you tell me would it be under RCM or FCM. Now I told you the constitution of supplier is important. The constitution of supplier here is partnership firm, so it should be under FCM. You have to write a working note to say that only an individual direct selling agent providing services to a bank would be under RCM. Then, services provided to a governmental authority. Services provided to a governmental authority. I told you, RTP questions would, in effect, will test you into amendments. Services provided to governmental authority has a amendment. Okay, in last discussion that we had on amendments, we discussed it, but I'll show you the amendment lecture notes. Look at this. A new exemption is introduced for services provided to governmental authority. Governmental authority is nothing but the authority which is there, which government has 90% or more equity or control, and they are constituted to do 243GW functions of the local authorities. Okay, so governmental authority, when they receive services, there is no blanket exemption, that is gone. Now services provided to government, that exemption covers only government and local authority, not governmental entity or governmental authority. But there is an additional exemption that is given to governmental authority, and that exemption is following services to governmental authorities exempted: water supply, public health, sanitation conservancy, solid waste management, slum improvement and upgradation. With this understanding, if you go and read that RTP once again, you will understand the services provided to governmental authority, and it is relating to sanitation conservancy. It's an outward supply. Would it be taxable or exempt? Next, rent paid to. So it's an inward supply. I make payment to a residential dwelling taken for running an office for providing DSA services. Owner of the residential property was not registered under GST. This is an intrastate supply availed. This is also covering an old provision of amendment, but it's not very latest amendment, but it's a amendment that you will have to understand. Okay, so I'll show you a chart that you can look at, which will give you understanding about every renting, not just one renting, every renting. One chart, if you look at it, will be good. Look at this particular chart on the screen, and then with this chart, this question also can be answered. Every renting. Renting of immovable property can be of two types: commercial property, residential property. Commercial property always taxable. But the supplier is government, local authority, parliament, state legislature, assembly, court or tribunal. Then if the recipient is registered, it will be RCM. If the recipient is unregistered, it will be FCM. However, if the supplier of commercial property is not government, it will be taxed under FCM, always. So, always taxable. There is one RCM, that RCM is when government, local authority, parliament, state legislature, court or tribunal, they give it to a registered person, let the registered person pay under RCM. Okay. Then, if the property in the question is a residential property, the property in the question is a residential property, then we have to ask the question whether it would be taxable, because in commercial property I told you it's always taxable, but in residential property sometimes there is an exemption. When the recipient, supplier can be any person, when the recipient is unregistered, if it's a residential property, it's like a house or a flat, renting of that residential property itself is exempted. But if the recipient happen to be a registered person, it is taxable under RCM. Now the supplier can be any person, supplier can be registered or unregistered. Okay, now let's look at this. Also they said, there's a note that I've written there, that's further amendment. So this came in May 23, further amendment in November 23, now that is there in the RTP. If a sole proprietor who is registered person receives renting of residential dwelling for residential purpose, it's still exempted. Say I'm a sole proprietor, I also have a business, so I have a GST number. I've taken a property on rent. Which property? Residential property. However, I have a GST number, but I did not take this property for my business. I have taken it for my family to stay. That does not mean it will be taxable, because this is not taken as a business expense. So they're saying sole proprietor who is registered receiving renting of residential dwelling for personal purpose will still get exemption. Now, by reading that, you come back to this question and then answer. Rent paid to residential dwelling taken on running an office for providing DSA services. So DSA service is taxable under FCM, so they should be able to take ITC. There is no doubt on that. If it's under RCM, they will not be able to take ITC. That's what they intend by it. Owner of the residential property is not registered. Supplier can be any person. Is the recipient registered? Yes, it's a partnership firm, registered. So would it be taxable? First of all, give me an answer, yes or no on is it taxable or not. Supplier can be any person, recipient is registered. Is it taxable? Yes. Under what charge? Under RCM. This is taxable under RCM. Then, fourth one, purchased a car for official use of managing partners of the firm for business use. If you purchase a car is a 5-seater, right? If you purchase a motor vehicle designed to carry passengers or meant for transportation of passengers, and your seating capacity is less than or equal to 13% including driver, as per 17, it's an inward supply, as per 17(5)(a), it's a block to credit. Understanding? Okay. Then, number 5, availed information technology services for their businesses. Again, this is also an inward supply. Availed information technology services for their businesses from partner's friend, Alan Waugh. Okay, Alan Vaughan from Melbourne, Australia. Mr. Vaughan refused to take any consideration. So there was no consideration. Open market value is 1,25,000. First of all, we have to look at whether it would become a supply. They said there is no consideration. So then we should look at, is it a Schedule 1 activity? Schedule 1 para 4 talks about importation of service. Is it importation of service? Yes. Because the supplier is in outside India, recipient is in India. Is it for consideration? No. Is it taken in the course of furtherance of business? Yes. To call it as a supply under schedule 1, there's one more criteria has to be satisfied. There should be related person. Will my partner be considered to be a related person? Yes. Whether partner's friend will be a related person? Whether partner's friend would be a related person? The answer is no. Partner's friend will not be considered to be a related person. So would it be a supply? No, it is not a supply. Is tax payable? No. Is it clear? So if it was a related person, it would have been a supply. Can I have a quick yes on the chat box just to ensure you guys are there? Is my audio and video clear here? I need a yes to continue discussion.
Yes, sir, it's clear now.
Okay. Now let's continue with the next point. Sixth point says provided training and performance appraisal services from Bangalore to following persons. Okay, this is provided training and performance appraisal service. This is an outward supply. ABC Private Limited, a registered supplier in the state of Kerala. A registered person, they have provided this. They have not told whether it is intra-state supply or interstate supply, because they're expecting you to understand this answer based on your understanding on place of supply, which is 12 subsection 5 talks about place of supply for training and performance appraisal. It says if it is B2B, if the customer is registered person, place of supply would be location of recipient, that is Kerala. What is the location of supplier? In Bangalore. So it will become what supply? Interstate supply. Okay. However, to Mr. Babu Cons, a proprietorship concern in Rajasthan, which is not registered. If it is B2C, it says where the training is provided, that will be the place of supply. So the place of supply for this service would be, where is the training provided? In Bangalore. So it will be Karnataka. Supplier is in Karnataka, recipient is also in Karnataka, place of supply is also in Karnataka, recipient can be anywhere else. It will become what supply? Intra-state supply. Okay, this is the point that we have here. Rates of CGST, SGST and IGST are 9, 9 and 18 respectively. All amounts are exclusive of taxes. All conditions necessary for ITC is satisfied. Other than this, no opening credit. Turnover is 2 crore in the previous year. You are supposed to compute what is the net GST payable by cash. When I say cash, it means that you have to compute what is the GST payable by cash, including your RCM liability, if any. We have put out the details here. Now we have to go ahead and then compute. Okay, shall we compute? Okay, so at net to GST computation question, we have to first look at, is it only intrastate supply or interstate supply? We have intrastate supply, we have intrastate supply, then we have interstate supply. Okay, all of them are there. So we need to have 3 GST columns and 1 value column, 1 particulars column. So let me go to work out. So you're going to work out it together with me. I've given you everything here. Okay. So question 6. I'm going to give you a different format from ICI. I think these formats are a little more easier for you to do. So your computation starts with a table which has a title called Computation of Net GST Payable Q10 Company for October 2023. So you have a table which is particulars, value, CGST, SGST, IGST. In that, part A would be computation of outward tax liability. You do a 3-step process: outward tax liability, input tax credit, and net GST. How many outward supplies do you have? That's what we are asking next. What is the first outward supply? It is service, intrastate direct selling agent service. We'll write a working note for that. You should write a working note number 1 for this. It's under forward charge, we have discussed. It should be taxable, we have discussed. Somebody should unmute me. Not able to click. Is my audio video clear? Is the audio and video fine, guys? Is my audio and video clear now?
Yes, sir. Yes, sir.
Yeah, I think it should work fine. I've moved to LAN, so my internet should be like much faster now. Can you spotlight me? All right. So can I get few yes from the student side? Okay. So let's get started. I think it's working fine now. All right. Okay. So second one, the first one is DSA. We have written that. Second one is government authority, services to government authority. That is exempted is what you have to write. So how many outward supply? Services to governmental authority. That is to be written as working note number 2. Okay, so first one we did not write the amount. Let's go and then write the amount. 2,50,000. Is it an intrastate supply or interstate supply? It's an intrastate supply, right? So 2,50,000 into 9%, 9%. How much will be that? Here you will write 2,50,000, 22,500, 22,500. Okay. Here it is exempt. Next outward supplies. Technology is giving us a very tough time. Whenever I swap, it is going to some other pages. So, okay, it's working fine. So let's go to rent paid is inward supply. The rest everything is inward supply. Only one more outward supply: training, performance, and appraisal. To ABC is inter and Babu Cons is intra. Training and appraisal. Can someone confirm me on the chat box that you guys are still there? I cannot still see the chat box. Okay, total would be what? So we have written direct selling agent taxable under FCM, government authority is exempted, training and appraisal also requires a working note. So the total would be how much? It will be 31,500, 31,500, 54,000. This will be the outward tax liability. Now part B we have to compute, which is computation of ITC eligible. We'll compute how much is the ITC eligible. We have so many inward supply in this particular question. Okay. So we'll look at what are the inward supply that we have and we'll compute what is the ITC eligible. Shall we? Okay. So what are the inward supply I have? So first inward supply is rent paid to residential dwelling. Can I take ITC? Yes. Is it an intrastate supply? Yes. It will be paid under RCM and then we'll take ITC, right? Rent paid on the residential property. You need to have a working note for that. Working note number 4. How much is the amount? It is 22,500. It is 2,500, 2,500. Right? It is it's an intrastate one. So it is 2,500, 2,500. Then second. Next is purchased car for, there is a block to credit. So we'll have to write a working note on that. Working note number 5. It's a block to credit. All right. Then we have information technology services. We should write it's not a supply. Okay. Information technology services from Alanva, Australia. Mr. Alanva. So that's not a supply. So again, no ITC on that. We'll write a working note number 6 for that. Anything else? No, nothing. So literally have just 2,500 you paid under RCM, that you will take it as ITC, right? Okay, so your total ITC would be 2,500, 2,500. Part C would be computation of net GST payable. For that you will rewrite what is your outward tax liability. What's your outward tax liability? This is 2,000, not 2,500, it is 2,250, right? It's 9%. Yeah. So it is 2250, 2250, no 2,500. It's my mistake. Then outward tax liability is 31,500, 31,500 and 54,000. You can take ITC of CGST or SGST on what? You can take ITC of CGST or SGST on the same, right? You can take an ITC of that. You'll take ITC of 2,250 here, 2,250 here. Okay. So I'm giving you a different method here. Like this is how we solve instead of, if you look at RTP, you'll find your answer to be a little complicated because they'll take then they'll show again. So I'll tell you an easier method to do that. Okay. So what is your net to GST? CGST should be first set off against CGST, SGST should be first set off against SGST. So after setting off, you don't have anything to set off for IGST. So your net to GST payable would be how much? So it will be 31,500 minus 2,250 would be 29,250, right? 29,250. Can I have the answer on the chat box, guys? When you don't type on the chat box, I feel like it's okay. Now what is that you have to do? Now you look at, after doing this, I will have to do what? I need to compute what is the tax payable by cash. The tax that you have to pay as net to GST by cash is 29,250 because I'll pay under RCM, I'll take the credit. Now after paying this, I have to, the question is asking you, you have to compute what is the tax payable by cash. So you have to add back tax payable under reverse charge mechanism. That is 2,250, 2250. So your GST payable by cash. When I say cash, I mean electronic cash ledger. How much? It is 31,500. Sorry, 54,000 also here. 31,500, 31,500, 54,000. This is the total GST that you would have paid by cash. Okay. Clear? Now let's write working notes. We need how many working notes? We need 7 working notes. RCM, why are you doing RCM add back at the end? That also should be one working note. So let's write working notes. Working note number 1 is direct selling agent. Services by direct selling agent being an individual to banking company located in taxable territory is charged under RCM. Here it is under FCM. We can write notification 13/2017 also as a point here. But I'm telling you that this is also a method of writing. Number 2. Okay. Number 2, what is the second one? Okay. Services by way of sanitation conservancy to government authority is exempt under GST. Number 3. What is the number 3? So here you can write notification 13/2017. What is the notification for exemption? It is notification 12/2017. Okay. Then number 3. What is number 3? Training and appraisal. We should write the IGST provision. As per section 12(5), place of supply for training and appraisal performance appraisal service to 1 a registered person is location of recipient. To an unregistered is where it is performed. You can write what is intra and inter. Okay, that also you write as a working note here. When location of supplier and place of supplier in same state, it is intra-state supply, and when location of supplier and place of supplier in different state, it is interstate supply. Number 4, what is it? Renting of residential dwelling to an unregistered person, to a registered person, is taxable under RCM. Again, the notification number you can write here also, it is the same 13/2017. Number 5, yes, here you have to mention IGST Act. It is mandatory to mention IGST Act because rest all are CGST Act. Okay. Number 5, purchase of a car. So we'll write it is a block to credit as per section 17(5)(a) of CGST Act. Inward supply of motor vehicle meant for transportation of passengers with approved seating capacity less than or equal to 13 persons, including driver, is a block to credit. So we don't take ITC. 6th point, information technology services from Alanva. Okay, so it's not a supply, we have to write. Which section? As per section 7 subsection 1C of CGST Act, read with Schedule 1 Para 4, importation of services without consideration in the course or furtherance of business from a related person or establishment outside India. Related person or establishment outside India is deemed to be a supply. However, partner's friend is not a related person. Hence, here it is not deemed as supply. Right? Then, working note number 7. What is working note number 7 here? Okay, working note number 7 would be, why are you adding back the tax payable under RCM in the end? I'm adding it back because I wanted to say that tax payable under RCM cannot be added to my outward tax liability and set off with the credit. So, we will write tax payable under RCM cannot be paid by utilizing ITC. It needs to be paid by cash. Once paid, it also can be availed as ITC. You look at, see, you can basically take ITC after you avail it. That's why you have paid tax under RCM for renting, and we took the input tax credit of that. Are you guys understanding this? This much you have to write. Is it clear, everyone? Can I have a quick yes if this is clear? So it's kind of a good question, like compulsory questions are now going to be asked like this, something from IGST, place of supply, something from supply chapter, something from RCM, something from ITC, all of this will be mixed. If this is clear, can I have a quick yes on the chat box, guys, so that we can go to the next question. We took too much of time to complete this particular question because of technical issues. All right, okay. Let's move to the next question. It's a very simple question. I'll read the question for you. Say, question 7 in your RTP, which says, from the following information provided by Messrs. Shasta Bazaar, determine the time of supply for the purpose of payment of GST. It issued coupon on 26/2023 worth 2000 redeemable against purchase of plastic items, specific plastic items. This coupon was redeemed on 31/7/2023. Second, it is issued coupon on 1/8/2023 worth 3000, which is redeemable against purchase of any item. This coupon is redeemable on 18/8/2023. Number 3, it received interest of 10,000 for late payment from the customer on 11/11/2023 for supply of goods which was originally made on 24/6/2023. Let's look at the provisions relating to this. Now, any time of supply question, so this question is asking about time of supply. Any time of supply question that we approach, we ask the question, is it supply of goods that we are answering, or is it supply of service we are answering? Is it supply of goods or supply of service? It is supply of goods we are talking about, specific plastic items, other items and goods. So all of these are from section 12. Then we'll have to ask what kind of specific scenario is it? Is it forward charge, reverse charge, voucher, residual case, enhanced consideration like interest? First case and second case talks about vouchers. Vouchers are given in subsection 4. Now they said, if at all you issue a specific voucher, the government says that I want GST even before you invoice, even before you supply the goods. How do I do that? They said, if the voucher is a specific voucher, what do you mean by specific voucher? The goods to be supplied against the voucher is identifiable at the time of issue of the voucher. I know what product I am going to supply against this voucher at the time I am issuing the voucher. In this particular question that you can see, there is a voucher which says that there is a specific plastic items. If there is a voucher for specific plastic items, we will know that the product against this voucher is going to be specific plastic product. So we'll call this as a specific voucher. I can identify the product at the time of issue. Then what will be the time of supply? They said I want to collect the taxes early. The time of supply would be date of issue of voucher. Very good. So what will be the time of supply in our question? It will be 26/2023 itself. Then if the voucher is issued on 1/8 for 3,000, it is redeemable. Second case, it is redeemable against any item. Is it a specific voucher or a general voucher? It is a general voucher, which means I don't know which product I'm going to redeem this against. Like an Amazon voucher, it's a general voucher. You can go redeem any product. So for such voucher, the time of supply for the voucher, the one who issues the voucher will have a time of supply to be the date of redemption of voucher. What is the date of redemption of voucher here? 18/8/2023 would be the time of supply for the second case. We'll have to write the answer with the provisions on top of it. Okay, then it received interest of 10,000 for late payment. Interest, when there is an enhanced consideration by way of interest, we will apply 12 subsection 6, which says I have already made a supply. Then I want to increase the value of that supply and I issue a debit note. The document that I issue for interest is debit note. The time of supply for such debit note for enhanced consideration like interest would be the date of payment of interest. What is the date of payment of interest here? They said 11/11/2023 would be the time of supply in this case, not the original supply date. Okay, so we are applying 12 subsection 6 here. Okay. I'll put out the answer once again for you to read so that you get full clarity on top of it. So I have written the answer like this. As per 12(4) of CGST Act 2017, time of supply for vouchers exchangeable for goods is date of issue of voucher. If goods exchanged is identifiable at the time of issue of voucher. If not, it is the date of redemption of the voucher. In the given question, goods exchangeable are identifiable at the time of issue. Hence, the time of supply is 26/2023. That is the date of issue of the voucher. Number 2, if the goods exchangeable are not identifiable at the time of issue, hence time of supply is the date of redemption of the voucher, 18/8. Then 12(6) says of CGST Act 2017 says time of supply for enhanced consideration by way of interest is the date of payment of such interest. In the given case, time of supply would be 11/11/2023. If you write like this as an answer, that would be enough for that particular question. Let's move to question number 8. I'll read the question for you. With reference to GST law, determine the place of supply with reasons in the following independent circumstances. Number 1, Miss Kanika of Kolkata, West Bengal visited to Jodhpur Law University, Rajasthan, and paid her college fees by purchasing a demand draft from bank located in the university campus. Miss Kanika did not have any account with the bank. You're supposed to determine place of supply. Now the first case talks about what services, who services, as bank services of demand draft. The charges collected by the banks are taxable under GST. So demand draft charges would be taxable under GST, right? So what will be the place of supply for the services of banking company, financial institutions and NBFCs and all that? And stockbroker, it is given in which section first of all? It is given in which section? It is given in 12 subsection 12 of IGST Act. We will go and look at what is 12 subsection 12 of IGST Act is talking about. Subsection 12, place of supply for banking company. You can see it here. It says financial and stockbroking services place of supply would be location of recipient as per the records. If the bank knows the location of recipient, when will the bank know the location of recipient? If the one from whom I collected the charge is my customer, then I know the location, right? They would have given me address before opening the bank account. If I don't know the address of the customer, then I'll keep it as the location of myself, like which means the location of bank itself would be the place of supply. With that understanding, coming back to this question. Miss Kanika of Kolkata, West Bengal, visited to Jodhpur Law University, Rajasthan, paid her college fees by purchasing a demand draft from a bank located in university campus. Miss Kanika did not have account with the bank, which means this is given to understand they don't know the location. Then it will be location of supplier itself. Where is the bank located? In university campus. Where is the university? Rajasthan. So it will become an intrastate supply in Rajasthan. Location of supplier is in Rajasthan. Place of supply would also be considered to be Rajasthan. Understanding? Is it clear? Can I have a quick yes on the chat box if this is clear to all of you? Okay, then next question. Mizu Machine Limited, registered in the state of Andhra Pradesh, supplied a machinery to Kayan Wind Farms Limited, registered in the state of Karnataka. However, the machinery was assembled and installed at the windmill of Kayan Wind Farms Limited, which was located in the state of Tamil Nadu. They're saying, who's the supplier? Mizu Machine. Where is the location of supplier? Andhra Pradesh. Machinery was supplied to the state of Karnataka. Okay, to a recipient who is located in Karnataka. But this requires assembly and installation. If your supply of goods requires assembly and installation, your section applicable would be 10(1)(d). What is 10(1)(d) says? The place of supply would be the location where it is installed. So here what will be the place of supply? Tamil Nadu, that's where it is installed. What is the location of supplier? It is in Andhra Pradesh. Place of supply is in Tamil Nadu, it will become an interstate supply. Understanding? Is it clear? Can I have a quick yes from everyone, please? Okay. Question number 9. Happy Constructions Limited, a registered builder under GST in Bangalore, Karnataka, has got permission to build 5 floors from municipal projects for one of its projects at Surajnagar. So Happy Construction wanted to construct a building in Bangalore. They got permission. Aditya Constructions, a neighboring housing project, approached Happy Constructions Limited to discuss regarding blockage of sunlight issue arising out of construction of 5 floors and asked it to build only 3 floors, for which 20 lakhs was offered as a compensation. Okay, so to get this 20 lakhs, what is that our company Happy Construction has to do? Construct more floors or not construct 2 floors? Do not construct 2 floors is the agreement. Then Happy Constructions agreed to the offer, which means that they gave an agreement. It may be noted that Aditya Constructions is not ready to pay any further amount to Happy Construction in addition to the amount already agreed. So they will pay 20 lakh all inclusive. Briefly explain with correct legal provisions whether the above amount received as compensation is liable to GST or not. If the consideration is taxable, then they calculate the total GST payable by Happy Constructions. Assume the applicable rate of CGST and SGST is 9% each. Now you tell me, what is the area they are trying to test you? They are trying to test you Schedule 2, Para 5E. What is Schedule 2 Para 5E is talking about? It says agreeing to an obligation. Very good, Aldo. Agreeing to an obligation to refrain from an act, to tolerate an act, to do an act or would be considered to be supply of service. So then we had a circular clarification on liquidated damages, which was talking about a lot of transaction. We said, if I agree to refrain from acting, it would be treated as supply of service. And the one example that is given is a builder agreeing to not construct additional floors, to not block the sunlight of another company. I have told you this can be brought into these examples, can be a question, and they've drafted a question on top of it. Now Happy Construction is telling here that we will not construct. They are agreeing. So 2 conditions they said it should be there. There should be an explicit and implied agreement. There should be an agreement to say that I will not construct, and the consideration should flow against that particular agreement. Is that condition satisfied here? The answer is yes. They are paying this particular 20 lakhs for the purpose of not to construct. Okay, so this would be treated as a supply of service. Now, when any question says that they are not ready to pay anything else, means this 20 lakh is including GST. So how much will be the value? 20 lakhs into 18 divided by 118. So tell me that is, what is the amount? No, that must be the GST that you're telling, Mariam. I'm asking you what is the value. Okay, 20 lakh, this is 3 lakh 5,085. How would you split this? It is CGST, SGST, right? Half, half. How much is the, so this would be 100 divided by 118. Sorry, I've put in 18. This is value is 100 divided by 118. So we have computed 18 means we are computing the GST. How much will be the value? It will be 20 lakhs multiplied with 100 divided by 118. How much is the value? 16 lakh 94,915 is the value. And how much will be CGST, SGST? 1 lakh 52,542 or 43. CGST same as GST. This should be the answer. Clear? So how do you present answer to this? You should first write What is schedule 2 para 5 says? You should also write the clarification says that there should be an expressed and implied agreement. The consideration should fall from that. Here the happy constructions is agreeing to not construct, so it will be a supply of service and it would be taxable. Since there is no additional amount is paid, we assume it to be inclusive of GST. Value equal to formula, GST equal to formula. That will be the answer. Is it clear, all of you? Can I have a quick yes if this is clear? Can I move to the next question? Okay. Look at 9b, question 9b. The aggregate turnover of Messrs. Mangal and Company, a registered person for the financial year 2022-23 was 8 crores. It approaches you as GST consultant for the issue of e-invoicing. Advise whether it is mandatory to issue e-invoice. There's an amendment here. What is amendment? From 1st of August 2023 onwards, your e-invoice threshold limit is what? 5 crore from any financial year. From 17-18 onwards, in any financial year. Though normally we say previous financial year. Here we have said any financial year from 17-18, it exceeds 5 crore, you are supposed to do e-invoices. For what supply? B2B supply. Now their turnover was 8 crores, so will that be applicable to them? Yes, e-invoicing is applicable. Then list out the entities which are exempt from mandatory requirement of e-invoicing. So those people who have been in my regular classes, do you guys remember we had a code word for people who are exempted from doing e-invoices? We know that people whose turnover is less than 5 crore need not do it. People who is doing B2C supplies need not do it. Apart from people whose turnover is more than 5 crore, still the certain people need not do. Very good. The code word was PC Gibbs. Is to have a code word for this. And what does PC Gibbs stands for? P for passenger transportation supplier. If you are a passenger transportation supplier, there is no need for you to do any e-invoicing. C stands for cinematographic exhibition supplier. Okay, if you are a cinematographic exhibition supplier, means if you are a movie ticket, you don't have to do e-invoices even if it's registered. Then G stands for 3 people now. GTA, government, local authority need not do invoicing. I stands for insurance company, B stands for banking company, financial institution, NBFC, S stands for special economic zones. These people need not do. This could be like a 5-mark question because you're writing all these exclusions. Are you guys understanding? Okay, now let's look at question number 10. Ramlala Enterprises, registered in Delhi, is engaged in the supply of interior decoration services to Andhra Bhavan located in Delhi. Service contractors entered into with the government of Andhra Pradesh, registered only in Andhra Pradesh. The total contract value inclusive of GST is 15,50,000. Payment for the same is due in October. You are required to determine the amount of tax, if any, to be deducted in above cases, assuming the rate of GST is 9918 respectively. Will your answer be different if Ramlala Enterprises is registered under composition scheme? Very simple, straightforward question. Let's look at this way. When will I have TDS applicable? Notified recipient is receiving taxable supply of goods or services more than how much value? 2,50,000. TDS is applicable to notified recipient. Who are these notified recipient? Department of Central Government, State Government, Local Authority, Government Agency, PSU, Society of set up by the government, entities having more than 51% by the government. These people will have to do 2% TDS and then deposit this 2% with the government, right? Here the value is how much? They said including GST it is 15,50,000. The value should be excluding GST. Even if you remove GST from 15,50,000 into 100 divided by 118, how much is the value that you get? These are the notified recipients coming under TDS. We also said 2% TDS and only applicable if the contract value was more than 2,50,000. 15,50,000 into 100 divided by 118 is how much? Tell me in the chat box, please. How much will be the value? On the chat box, please give me the number. I want to know whether you guys are there. 13,13,000, which is more than 2,50,000. Okay. So by the number that we have put in, is TDS applicable in this case? The answer is yes, it is applicable. However, there is one additional case which says there is no TDS in certain cases. When location of supplier and place of supplier are in same state, which is different from the state of recipient who is supposed to do TDS. We will have to look at that also, whether it is applicable in this particular case. What is the meaning of that? Here, supplier is Ramlala, registered in Delhi. It is providing services to government of Andhra Pradesh, which is registered only in Andhra Pradesh. The service is in relation to interior decoration services to Andhra Bhavan located in Delhi. When there is interior decoration service provided, which section would talk about place of supply? It will be section 12.3. It is service relating to immobile property. Location of supplier here is Delhi. Place of supply will also be Delhi because it is the location of immobile property. However, location of recipient is Andhra Pradesh. Can I ask Andhra Pradesh government, because here what will come, it's an intrastate supply, CGST and Delhi SGST has to be deposited, right? Can I ask Andhra Pradesh government to deposit TDS of Delhi SGST? Not possible. So what is the solution here? They said TDS is not applicable. Understanding? So the provision that is applicable here would be that location of supplier, place of supplier in same state, which is different from the location of the recipient, entire TDS itself is not applicable here. Will your answer be different if they are registered under composition scheme? No. When TDS is not applicable, whether they are registered under composition or not is irrelevant. But if TDS is applicable, even if they are registered under composition, it is still applicable. Okay, that's the understanding you need to have. Here TDS is not applicable because of the reason, exception that they have in section 51. 51 is talking about TDS. Is it clear, all of you? Okay. Now the last question in our RTP is this: examine the implication of GST on supply of food and beverages at cinema hall. What is the GST applicable for food and beverages in cinema hall? This is there in the amendment material that I have put across in the previous session. So we'll just go ahead and then recap that and then give you that understanding. Supply of food and beverage at cinema hall. So you can always go ahead and then book food also included in your cinema hall tickets. Now the question is, when you go and have popcorns or when you go and have coffees or whatever food items in the cinema hall, which would be considered to be a restaurant service, they said supply of food and beverages in cinema hall is taxable as restaurant service provided you're getting food and beverages from the cinema hall and it is independent from the cinema ticket. You go and buy it separately or you book it separately in the online and there's a separate billing happening. If it is included as a composite supply where sale of cinema ticket and supply of food and beverages are clubbed together and supplied as a bundled supply, it satisfies the test of composite supply. If you go to Book My Show, you'll find ticket and food bundles. If you go book a food bundle, then it would be a composite supply. Which will be the principal supply? Cinema ticket would be the principal supply. Entire value, say 500 rupees with food and cinema exhibition, will be taxed under the rate of cinema exhibition, not the restaurant rate. This is the clarification that they have given. The question is on clarification. Now let me tell you, one of the exemptions will, now a lot of people ask me this question, how do you tackle the theory? And I have a very simple start method that you can do. The one thing that you have to look at is all the end of the chapter theory question. Look at all the amendments. There will be one theory question from the amendments for sure, short. All the previous exams, same pattern. There is one question of the theory question that is picked up from RTP. Lots of examination, they'll pick up from one from RTP, not this RTP, sometimes past RTP. Look at all the RTPs in the past. Okay, look at the theory question that they have asked. Okay, that's why in regular when I'm giving the books, I'm giving you all that included in it. Okay, so look at all those theory questions that they've tested, all the amendment related question, one question would come. But I'll still not recommend you people to go ahead and then appear theory if you have clarity in the other two. See, the pattern of question is that you write 15 MCQ, 35 descriptive, out of that 15 is compulsory, then 3 questions, right? Only one is theory, the other 2 are practical questions. I'll urge you to write practical if you're good at that. You take up theory only if you're not good at practical question. Okay, that's the thought process in which you should appear, your examination. Though the RTP discussion would only be that, and it's a good RTP, it's not a bad RTP. It gives you a lot of introduction to the new chapters that is being added. So this time around, those discussions are very important. Okay, so we have come to an end of our RTP discussion. I really wanted to go, get you through the MTP, the first MTP also, but I don't think it's ideal for us to discuss in this session. I will host another separate session with less network issues to discuss that separately.